This is brought to you by John Daniel Partners LLP.
Financial planning is an integral part of every business. You need it in terms of scaling up and also in your growth, because I believe the need to actually get into business is to see your business growing and the numbers actually counting to actually achieve the set goals that you had set previously as you had started the business. So basically, there are many other factors that can influence the growth of the business, but the financial planning bit of it is very, very crucial for any business to actually stand on its knees. I can have a small definition of what financial planning is. Basically, is a process of achieving your financial goals. Every business should have financial goals so that you can actually work towards meeting the goals. But in between, on the way to actually achieve these financial goals, you'll need a process that can actually, or a roadmap that can actually lead you to achieving the goals that you've actually set up for your business. On the way, we'll have the assessing of this is included in the definition, where you have the assessing of the current financial status. Basically, financial planning at the initial stages is where you'll actually do the analysis of the current health of your business, financial health of your business as it is. Then you'll also determine the future financial needs that you need. You'll also create a roadmap to actually achieve these goals that you want to achieve at the end. Then with a combination of the three components, then you can have the definition of the financial planning. Basically, it will entail these three crucial steps. For the financial planning, we can actually classify it into different components, because a financial plan is a financial plan is a document that entails different parts of it. But we can actually have them as components in the presentation so that you can understand them very well. At first, there's a setting of goals. Remember, you are doing the financial planning to actually achieve a certain goal that you have, a financial goal for that particular case. And in the beginning stages, you'll need to have the setting of the goals so that you can now you can have a roadmap towards working towards the set goals of the organization or the business. But then the goals can either be of short term or medium term or long term. This depends on the type of goal that you want to achieve over a specific time that you are actually considering. So you can have the three, you can have a short term, you can have a medium term, and you can have a long term goal. But they have to be financial for this case, because we're actually talking about the financial planning. If we are talking about a goal, then the goals are actually the desired outcomes that you are committed as a business person to achieve, or as a team of the business, you are committed to actually achieve within a specific time period. So basically with that, the goals have to be smart. And for these goals to make sense to the business and the financial part of planning, they have to be smart. And the definition of smart, we can have it as the S will stand for the specific, M will be measurable, A will be attainable, R will be reliable, and T will be time bound. Basically, once you are saying the goal should be specific, then they should be well defined and clear on what needs to be accomplished. So your goal should actually state clearly what needs to be accomplished at the end of the process you're having. Basically, this will be determined by the outcomes that you need at the end of maybe a certain period of time. Once we get into measurable, your goals should actually be, you can be able to evaluate them on the position whether you have attained them or not. So for them to be measurable, you must have a way of evaluating whether you've achieved it at the end of the period or not. So then now they'll be measurable at that particular point. For the attainable part, they should be realistic. They should not be blown out of proportion. You can achieve them reasonably with the means that you have and the resources that you have. That now will make them attainable at that particular case. For the relevance one, do the goals actually make a difference in the overall objectives that you have as a business? So if they make an impact or they bring out a difference in the overall objectives that you have as a business, then those goals are actually relevant to your business. For time bound, the goals should be bound or done within a specific time period. So they should not be open. So you should specifically and clearly state within which period the goal should be attained. Basically, with that, your goals will be smart, and I think you'll be moving towards the right direction in your financial planning. I would like maybe for some of our business people who are already on the presentation, maybe you can outline in the chat section some of the goals that you have as a business, maybe, and then we can analyze them later and identify whether they meet this criteria of being smart. Onwards, I'll give a good example of a goal that's smart, and then we can look at it and see whether it's smart. The second component would be the analysis part. Remember, financial planning is a journey. Once you've set the goals, you need now to evaluate the financial health of your business. Basically, this is the analysis part of it, which is very crucial. You need to understand your business very well, the position you are as at now, before you actually move, so that you can have a way forward moving towards attaining the goals or objectives that you have as a business. We'll see the criteria that you can use later in the slides on the analysis part, because it's very, very crucial to actually understand your business. The analysis, this will involve the analysis of the financial information that you have for your business. Mainly, the financial information, you'll be getting it from the financial statements or a structure that you have within the business that can actually bring out the data that you have for the business. Basically, that will be in the form of reports. But we'll have a deep analysis later in the presentation on how you can actually analyze your business, or the ways you can use to analyze your business to get to a point where now you can say this is the position we are as a business, and this is the direction we need to get to follow to get to a particular destination. We will also have forecasting as part of it, as part of the financial planning. On the forecasting, basically you are saying you need to project your financial data into future periods so that you can see how much you'll be earning or how much you'll be spending at that particular point of time, but this is in future. Then in forecasting, there are good tools that we can use in the financial planning. Basically, budgets are very good in forecasting, and the cash flows are always very good also in forecasting. Then you'll also need to identify the potential risks that your business faces. At this particular point, you'd want to know what business risks am I exposed to as a business person, or what business risks are there for my particular section or industry that I need to check, that would otherwise, if they are not checked at this particular point, they would influence my financial stand after a certain period of time. Maybe you'll check on the risks, such as the statutory risks. These come if you're not complying with the statutory requirements, then this may bring an issue in terms of fines and penalties in the future. We could also have maybe other risks such as credit risks. If you don't analyze the credit risk or you've attained your credit limit to customers at this particular point, then you'll be having no cash flow for future development of the business. So those are some of the risks that may come within the business, but it depends on your industry, but they have to be checked on so that now you can have a good way of achieving your financial independence. For the analysis, I have a very good framework that you can use to actually analyze the health of your business financially. There's a framework called MAD. Basically, that will be the measure, analyze, and decide framework, which you can use to analyze the business operations and the business financial stand at a particular time of period. On the measure, which stands, the M stands for the measure. Basically, you would want to know the position of the business financial performance at that particular point in consideration, and also want to know its economic condition. Basically, we are saying, in terms of the business financial performance, this you check into the profitability, the rate of profitability or the rate of returns that for money invested into the business. Basically, you want to check how much profit am I gaining within a certain period. It can be annually, it can be quarterly or semi-annually. If it's a loss, you'd want to know how much loss you've made. At this particular point, we're only measuring. Then you'd want to know how much the rate of return, maybe for capital invested into the business. You'd want to know also which line of business is actually bringing in lots of revenue and how much of revenue is that line bringing. You'll also want to know what costs are actually driving our profit low, because if you would want to analyze and see the costs that are very high for your business and the amounts for these costs. Basically, this will give you the measurements of the amounts that are involved into the operations of the business financially. Then you can use reports such as the financial statements. You can also use internal operating data. Basically, these are developed internal mechanisms that can generate reports. Then from these reports, then now you can be able to pinpoint the amounts that you'd want to measure. On the analyze part, this is where now, after measuring the data, you need now to internalize the data and interpret the financial information that we've actually measured in the previous period. You may consider having identifying the trends, maybe in the profit. You may want to see, am I on a downward trend for my profit, or am I growing in terms of profit? You'll also want to see how the costs are rising, or which costs are actually going low. You also want to see the rates of return. What are the rates of return over a certain period? Identifying the trends you can either decide to have it annually or semi-annually or quarterly or monthly. That depends on the goals that you want to achieve at that particular point in time. You'd also want to know and analyze deeply the source of financial outcomes. This is why you'll say, if you want to deeply analyze the revenues, then you'll have outlined revenue lines that you can use to analyze. Maybe you'll say, if I'm a clothing line business, then I would have revenue for rentals, maybe of gowns or the retail section. Then I would want to know how much is renting bringing me, how much of revenue is renting contributing on my overall revenue. Then how much is the retail section contributing to my overall revenue section. Even a bakery, maybe you'd want to analyze the different lines that you have. Maybe you'd have catering, you'd have bakery of cakes, or some other lines of businesses. Then you'd want to know how much each section is bringing or contributing towards the overall revenue of the business. The other thing that you'd want to understand is the unit economics. Basically, how much does it cost you to produce one unit? If you are doing bakery, then you'd want to know, if you are selling cakes, you'd want to know how much the cost of that particular cake that I'm baking. Then I would want to have specific rates for the costs that are incurred for that one particular unit. Then now you'd be able to actually know how much cost is it there if you produce a certain number of cakes at that particular point of time. Then you'd want also to know how much of profit each unit is bringing. Basically, the unit economics can enable you scale up because it's so easy. Then if you know how much the cost of producing a particular product is, then it's so easy to actually forecast using that particular unit. Then on the analysis part, we'll also check on the successes and failures that you have. Basically, you'll check, you go back and see, we had decided to achieve a certain, maybe we had a revenue target of 5 million. We've not achieved the target. Maybe we had 4 million at the point of analysis. Then you'd want to see why that failure came in. What are the factors that contributed to the failure at that particular point? You can also have successes. Maybe you've successfully lowered certain costs. Then you'd want to see the factors that contributed to lowering the costs that are in consideration. Basically, at this stage, you'll ask so many questions because in the analysis part brings out data that you can actually question out. If it's profit and you're having a plunge, you'll be asking the reasons why you are having a plunge at that particular time, or if there are any costs that are extremely high that you didn't anticipate, then you can look into the factors that contributed to the costs actually rising at that particular point of time or at the period of consideration. Then after measuring and analyzing the data that you have, then you can go to the decision side of it. Basically, on the decision, this is where you'll be making decisions based on the analysis that you have from the business operations. Also, you'll have remedies for the problems that you've encountered. Remember, on the analysis part, you will analyze even failures. Then after raising the questions, then you can come up now with the solutions of the problems that you've encountered as a business. Then now, if there's any success that you've achieved, you can actually build on it, and then you can look at the opportunities that are there for your business and capture them, and then grow your business from this particular point. Then now you'll have discussions on the financial implications of what you've actually done in the previous steps. That's basically by the measuring and analysis part of it. Then you can actually communicate them maybe to your employees or the board of directors, basically the team that you have, so that you can see how now you can form a strategy to move from where you are maybe to a higher place that you are considering to achieve in a particular point of time or in a particular period of time. I have a good example of if you have questions, we can interact on the chatting section. Then the questions can be answered. But I had previously asked to state your goals for those who are in business. Then we can analyze them and see whether they are smart. Because if you want a very good financial plan, then your goals should actually meet this criteria of smart. Have a good example here. One of my goals from one of the businesses should be to increase the likes on Facebook page from 1,500 to 2,500 as at the end of October through advertising. Now, basically, if we analyze this October, so that means this is a goal. Our desired outcome would be actually getting to 2,500 likes. And is it specific? It is well defined and clear. If we had attained 1,500 likes, then most probably we'll attain the 2,500 mark. It's not overstated. It's measurable since we can actually measure the likes that we want to get. Though the likes are 2,500. Attainable. This can be attainable because the resources that are there can actually accommodate such a goal to be attained at that specific time or period. Is it relevant? It's very relevant because social media is one of the most influential marketing spaces that we have for businesses. Then we project to have more incomes run into the company, into the business. Then it's time bound because we have a time period considering the goal, considering that we said and then to achieve this particular goal. So this how goals should actually be. They should have a complete statement of the SMART. Then you can be able to work towards achieving such a goal. I would want to see the goals that we are having as businesses. We can interact on this chatting section so that it can be interactive. Then we can sample a few at the end of the presentation, and then we can subject them to the SMART criteria. There are some steps of analyzing the financial statement. Remember, on the upper slide, we had the MED framework that can actually help us in analyzing our financial data and information. But then you can have some steps that can guide you as a business person towards achieving financial independence. At first, you'd want to understand the sources of revenue and the revenue growth. Basically, for a business, you should have segments of revenue. Basically, if you are running a clothing line, I would try to imagine if you have several business revenue lines, that would be Maybe you have a retail section, you have a wholesale section. Those now will become your segments. Remember, segments are the particular personas attached to a particular who are behaving in a particular. You can actually identify a particular trend of behavior for your specific customers. Then now you can group them into a segment. A segment will involve people with the same behavior and preferences. So if there are retail people who don't buy wholesale clothes, then that retail section will be your section at this part, your business revenue line at this particular point. Then you can also have another revenue line for the wholesale people. You'll want to understand what are the sources of this revenue that you have for the business. If you're baking, then you want to understand how much of maybe cakes, the contribution of cakes towards the overall revenue that you're getting as a business, or the contribution of cookies, or any other thing that you are doing, or juices, towards the overall revenue that you have as a business. Then you also want to see the factors that are bringing in the growth in revenue, or the factors that are likely to influence the revenue growth in your business. Maybe you'll check on maybe there's influx of a certain segment of customers, then that most probably will bring a growth in the revenue. Maybe you'll see on price changes, maybe you marked up a certain item in your business to a higher price than it was previously, then that, and holding that you'll sell, it will always be on demand, then now you can project to have a revenue growth. There'll be other factors such as the market. If the market is responding well to the products, then you expect to have a revenue growth. Basically, these are the things that you want to understand. You want to dissect your business to understand, so that now from here you can actually make good, you can have a good road towards achieving the set goals that we had said previously at the start. You also want to understand the costs and margins that come with your products. The costing is very crucial because it forms the basis of the price that you're actually going to subject to your products. So knowing the cost per each product is very crucial for a business, because the costs are actually the underlying factors for any profit making business. You also want to know the margins of products, so that you know if you are receiving small margins, then you'll know that you're incurring a lot of costs in the production of, and you're selling it at a lower price, holding the other factors constant. Or if you are making a big margin, the margin will be the difference between now the selling price and the cost of that particular product, the cost of producing that particular product. So you'll want to understand maybe you have raw materials for a certain product. What is the cost of each material to actually come up with a product? Or if you are doing cakes, you have ingredients that maybe you'd want to quantify them in terms of cost, so that you can see if I'm making a cake, a unit of cake, how much of this, how the amount of the whole combination of the ingredients to actually come up with a particular product. You'll also want to understand the profitability and the rates of return performance. Basically, you want to, the profitability side of it, you want to know how much profit you are making. That can be on gross profit or net profit. You'll also want to see the rate of return. Maybe you invested 500 shillings and you are getting 100 shillings. You'll want to see that rate of return and compare it. Maybe you have several product lines. You may consider having comparisons of each product line, the rate of return for it, because you'll invest differently in different products. You'll also want to understand the working capital and the operating cash flow. Basically, the working capital will be the funds available to actually meet your current and short-term obligations. If you have payables is money that was supposed to pay to creditors. Then you'd want to see how much funds do I have in the business that can actually cater for paying the creditors at this particular point. So that can help you formulate a very good operating cash flow. Basically, on the cash flows, you'll have all the revenues that you've received and the costs that you paid out for your business. That will include now the operating cash flows. Then from the operating cash flows, you're able to see how much money is remaining, maybe in the bank or in cash, for you to pay the short-term obligations, which are the payables or the payments to the creditors at this particular point. You also want to understand the lines of business data. You'd want to understand the different sections of your business. Before you start a business, you have to identify first the target market. Then the target market will form the segments that you want for your business. Basically, the segments that you have said earlier, these will form part of particular group of customers who have the same behavior and preferences. Then from the segments, you can actually derive your lines of business. It will be so crucial so that if you do the math and the financial analysis, then you'll be able to see one segment is giving me a certain amount of revenue, the other one is giving me a certain amount of revenue, or it costs me this much to actually serve a certain segment of my customers, which is maybe higher or lower towards another segment. Then now in business, you can have a comparison and see which segment is actually profitable to serve in your business. Basically, if you follow these steps, then you'll be on the right channel towards having a very good financial plan for your business and achieving it at the end of the period in consideration. As we had seen, budgeting is one of the components that we have for the financial planning section. If I were to explain a budget, then these are just estimates of the incomes that the business derives and the costs attached to deriving the revenue over a specific period of time of consideration. Basically, for budgets, budgets will not be actual, they'll be just be estimations from the trends that you have for your business, and they'll be mainly for the incomes and the expenses incurred by the business. But it's a very good tool to actually work with if you want to do projections of your business and forecasting of your business operations. We can learn now how you can actually set up a budget for your business. Every business needs a budget, whether small or big, because this will be a guide against now your actual spending or actual incomes. Basically, this will be a benchmark so that you'll have it as a benchmark to see whether you're overspending or you're underspending or you are receiving less revenues than the projected ones, or you've actually achieved your targets over a specific period of time. Before you actually do a budget, you have to set the goals clear. Basically, we've explained what goals are previously. We've said they should be smart. For this particular case, they'll have to be financial in nature. And you are not limited. They can be short-term, they can be long-term, or they can be of medium-term. That depends on the structure that you want for your business, whether you want to achieve the goals in the short term, or in the long term, or in the medium term. You should also actually gather the relevant financial information. Basically, this is what we've gone through, collecting information on the sources of income that you do have or the business lines that you have as a business. You'll also want to know the expenses that you are incurring as a business and the amount that is being incurred over a specific period of time. Then you'll want to know also the trends that you have. Is the profit increasing? Is the profit reducing? Are certain costs increasing over time? Are they flat? Are they fixed? Are they variable? Yeah, those are some of the considerations that we'll have to make, because while making the budget will be based on a certain trend in the past that you are using to actually make the budget. Then you should also track the spending and income. Basically, this is knowing you should have, you can get it from the financial statements or any other report that you do have. I understand at this particular point, business people should be actually keeping their records, because it's very important, because this exercise can only be done once you have the records well. And also, if you have accurate records, then the budgeting process or the financial planning process can be very effective. Basically, on the tracking, you'll be wanting to know how much of revenues I'm gaining within a specific period of time. You want to do a budgeting on a monthly basis. You want to see the trends from one month to the other one, to the other one, to the other one, so that now you can form, you can have a basis of actually forecasting for the future based on those particular patterns of revenues or expenses. Then after doing the 3 steps, then now you can go on and formulate your budget. But this should actually be based on your spending habits. It should also reflect the goals that you have as a business. It should also be realistic, something that you can achieve. You not want to be too overambitious in a budget. You also not want to understate some costs, while you can actually see the trends of the costs are actually increasing. Then it should be sustainable. Basically, you not want to if you have projected less revenue and you project more expenses, then that budget will not be sustainable for you, because also while doing the budget process, you should aim at achieving a certain amount. If you have allocated a certain percentage of your revenues to be contributed towards the expenses or the costs for producing the product or getting the revenue, then if your costs are a certain percentage, then you should not go overboard such the set criteria that we've used at that particular point. Then first, before you remember, you have a fixed cost for you have a fixed amount for the expenses, because you'd say, if I'm earning a revenue of 100,000, I would want my costs to be at 50,000. I would not want my cost to surpass that mark at this for the venture or for the business to make economic sense. Then you'll have to allocate that 50,000 to the costs that you have, to the cost heads that you have, to the expenses that you have that are incurred periodically by the business. But then, in allocating the costs, then you may start with the essential expenses. If you are dealing with a finished product, for a case, if you are taking a case of the bakery, you'll have the eggs, you'll have the food color, you'll have the wheat flour, and other raw materials that are used to, ingredients that are used to produce the cake. Then you'll have, because this is what you're actually using to produce the revenue that you want, you'll have to prioritize them in the budget process. Basically, those are the particular expenses that you should allocate the cost first to. Then the rest will come after that, depending on what you view is essential for the business. If that cost is maybe limited, it will injure your goals that you've actually set, or will make your goals unattainable if you allocate that particular expenditure. Basically, that's the process. Then you'll have a budget for yourself. It's a very simple task. This one can be done by anyone. It's also a very good tool to track your progress as a business person, because you'll be able to know if you have made the budget based on a monthly occurrence, then you'll be able to know whether you've met your revenue target or you've met your expense target for that particular month. Then now you can know how you can move forward from that particular scenario that you have at that particular point. After you've made the budget, then but before we go to that, I have a small budget here. It's a small, simple form of a budget. For my company, which is XYZ Limited, I would want to do a budget from January to June, but this is not limiting. You can either do it annually or monthly or quarterly, depending on how you formulated your business operations to be. I will have my revenue, then I'll have my expenses. I'm getting my revenues from the retail section. This basically selling the clothes directly to the customers. Then I'll have rentals where I'm renting gowns. For January, I'll estimate this based on past trends. Remember, you have to do the financial analysis so that you can know the trends. Then now you can have your budget. I'll have January. I'll have 20,000. Then I'll project my growth for February, March, depending on the trend that I've gotten from the financial data that I had. I'll also go to my rentals, 15,000, then follows the trend. Basically, at the end of January, I'll be able to compare what I've actually raked in as revenue for the retail and the rentals. Then I'll compare against the budgets. Then I'll know whether I've underperformed in terms of revenue or I've actually attained my targets or surpassed. Basically, for revenues, if you underperform, then that should be a cause of worry for you, because if you don't hit the targets and the expenses are still constant, then that means your profit margin will be very low. Then you can actually interject earlier and see what's causing your revenues not to hit the target that you have in the budget. For the expenses, you'll outline all your expense heads. Then you'll have a cost for each expense head. Then you can project it over the period that you want in considerations. Basically, after you have this data, you can compare it with the actual data that you have from your business, and you'll have made up a budget that can be very useful for you. Going back to after the budgeting, you don't just end up after you have the budget, you need to have a roadmap on how you can actually execute the budget so that it makes sense in a business way. You'll have to monitor and do adjustments. You'll have to do regular monitoring of the budget. Basically, that's comparing. If you've done it on a monthly basis, you'll have to compare it with the actuals on a monthly basis, then see whether you are hitting the targets or you are underperforming at that particular month. This will help you identify any discrepancies and make adjustments needed in time. You will also be needed to do a review and revision of the budget. If you have, maybe there are some factors that have come in that were not anticipated, then you'll have they will affect the financial information or the financial outcomes of your business. Then you may need to have the changes into your income. And also, for our case, when we had the new NSSF rates, then if we had a budget with the statutory deductions, then that would mean we go back and incorporate the NSSF, the Tier 2 NSSF that came up, or the recent housing levy. Would have now to go back, review the budget based on those expenses that are coming up. Basically, you'll be able to adjust the budget to reflect the changes and stay aligned to your business operations and to your goals. Then there's also, if you are getting, if you are struggling to actually come up with a good budget, then it's advisable to seek professional advice. Then the professionals will be able to guide you to come up with good budgets, so that now they can be helpful to your business. Then, why is it important to conduct financial planning? Why do you need financial planning for your business? One would be for strategic decision making. Basically, a strategy would be what you'll do as a business. What do you want to offer as a business? Then to whom would you want to offer that particular product? That forms a strategy. Then how can you best do it so that you can actually do the two previous, you can, after selecting the product and who, how best you come up with a roadmap on how best you can deliver the product to the target market. Then that will be the strategy part of it. But then now when it comes to financial planning, then once you do the financial plan, because you'll be data driven and you'll have the financial data ready, then that will inform the decisions that you make, that the decisions now that form the strategy will come up from the data that you've actually derived from the financial planning. Then now you'll be knowing, because you have the data, you can do some strategic decisions. You can make some strategic decisions. Basically, I gave a good example like gaining new markets, because before you get a new market, then you'll have to analyze how much it will cost you to get into the market. You'll have to analyze what product will offer that market, then how will you offer that product market, or how will you serve that particular segment of clients that you do have. Then because budgeting and basically cash flow are part of the financial planning, budgeting will also help you monitor and control expenses, because you can actually, in the review sections where you'll be reviewing and monitoring, you can be able to know what costs are actually maybe surpassing the budgeted amounts that you had, or how are you faring in terms of revenues at any particular point of time. Financial planning can also be a measure of performance. Basically, it will establish the key performance indicators and the metrics. Using the key performance indicators, basically these are what will be used to measure your performance as a business. Maybe that would be profitability. If you use profitability to measure the performance, then you'll say If, for example, YXZ Limited company limited, I'll measure my success by achieving maybe a 50,000 profit in any particular month. Then that will be my performance indicator. Then using the financial plan, you can actually, because it entails all those analyses, then you'll be able to get to know the position of the business at any particular point of time. It will also you manage the cash flow. Remember, the cash flow is all about what's getting in and what's getting out, the funds that are coming in and the funds that are moving out of the business. Basically, it will give you an effective planning tool that will be able to project the revenues that you will get in future or the costs that are going out of the business in future. It will also help you in risk management. We said one of the components of the financial planning is a risk management. Basically, you look at the potential risks that the business is facing. Then through the financial plan, you can actually come up with ways and decisions to actually mitigate such risks if they come up, or you can find ways on how you can avoid such business risks. It will also form a very good basis for your investment decisions. Basically, if you want to explore certain markets, or you want to expand your market, then you'd want to know how much of funds you have, maybe to explore how much would be willing and how much funds you have at hand to actually pump into the new market before you can realize profitable gains from that particular market. Basically, this will give you a good analysis of the opportunities and what opportunities to explore at what particular point of time. Because if you do a very good financial planning, then there will be opportunities that you can take up within a short period of time. There are others that will need maybe because of the funds that you have currently, or the capital that you are working with cannot accommodate such opportunity at that particular time. Then you'll need more time to actually think it through and plan about the opportunity. Then you'll have resource optimization. Basically, with the use of the budgets, you can be able to see where you are wasting a lot of money. That's basically incurring a lot of costs that should not have been incurred. The wastage now brings the inefficiency in your financial operations. Then now you'll be knowing if you have to allocate funds, then you'll be knowing to what particular expenses now you should allocate the funds to, or give priority to the main expenses and leave out the ones that have lesser priority. Basically, that will enable you to achieve the maximum benefit that you can have from your business. Remember, we are always in business to make profits and would want, I know the happiest business people are the ones who are maximizing on their benefits. And I know that's the goal of every business person. Basically, the financial planning will help you attain that. In the chat section, maybe we can have what you've gotten from the presentation, or comments about the presentation, and what maybe you'll go and implement in your business that you've gotten from the presentation. Maybe we can check on the goals that I had requested the members to share.
From Linetta Nidai, I need to do a cash flow statement for next year by October.
Okay. I think we can look at that and subject it. Maybe I would want to have your views on the chat section about the statement, that the goal statement that has been given by Lynette. Someone maybe could comment on that and see whether does it achieve the SMART criterion, or where does it fail? What do you think? What do you think of the statement? Does it meet the criterion for being smart?
I think I can say it's smart because I've actually stated that by October I should have done my cash flow projection.
Okay.
Yes. So if it's specific, I've been specific to say that it's the cash flow statement because it will help me with budgeting or my business costs.
Okay.
Yes.
Okay. Yeah. For me, the statement is specific that you want a cash flow statement, then it's time bound, that's by next year, October.
Not next year, October. This year, October. I need to do my
For next year,
projections.
by October.
Yeah, by October of 2023. I think I didn't define the time frame, which was 2023.
Okay.
Yes, so the cash flow is from August. I want to do a cash flow from August till August next year, 2024. So I should have done
Okay.
it by October of this
Yeah.
year, which will be
Okay.
end of October,
Okay.
which I think is
I think
30.
now that's very clear.
Yes.
How will you measure it?
How will I the things to measure? I'm
Yes.
working with my accountant,
Yeah.
and we agreed on 29th of September that we're having a
Okay.
sitting with her to be able to
Yeah.
establish what are the budgets of my business.
Yeah.
So already the measurement I think that I'm having is that by September 29th, we're having a conversation regarding
Yeah.
cash flow statements.
Okay. For the measurable, for it to be measurable, then for you to have the document, the measurability test is, are you able to evaluate whether or not you've achieved that particular goal? So for this case will be, if you have a statement, the document by this particular time frame that you have, then now you'll have achieved that particular goal.
Yeah.
Yeah. So it's attainable because this is something that can be done and you are very specific of the time period and time. So
Yeah.
that's a good goal.
Thank you.
Yes. Maybe now we can have the take home, what we've actually taken home from the presentation. Maybe something that you didn't know about the business.
Sorry, Chris, I can see two other goals from Ali and from, yes, from Ali, it's just one. The other one is a comment. We can maybe comment
Okay.
on Ali's a goal. He says, I need to have a simple financial policy for my organization by end of this month.
Okay, the goal will be stated to have a simple note. I need, we'll start by to have a simple financial policy for my organization by the end of the month. So it's very specific. He wants a financial policy. It's very measurable because if you produce a document by that particular time frame, then you're able to measure the success of that particular goal. It's attainable because you can have the policy. It's not something that will drain your resources. It's very relevant because in terms of financial sense, a financial policy will be relevant at this particular point of time. Then it's time bound. There's a time by the end of this month. So it's smart.
I can say my take home has been that I didn't know that actually budgeting helps you with risk management in regards to business. So thank you for the insights you've given us in the class, Chris, and you're very, very clear in your presentation. I really, really appreciate.
Okay.
Yeah.
I also appreciate for your time.
Thank you.
Okay. Thank you, Chris, for such a wonderful presentation. I have learned a lot. from the presentation on financial planning for our businesses and budgeting. Yeah, and also thank you for the participants. We have been so interactive, and that is very good of you. So thank you so much for those that have joined and listened in. I can see many of us are still here, so thank you for taking your time. Maybe I can add one thing on Chris's presentation, is that when we are planning for our finances, when we are budgeting for our businesses, it is also good for us to separate our personal accounts or our personal money with the money that is for the business. Yeah, it's good to have the two accounts. Let the business run by itself. You can pay yourself. You can set a salary for yourself so that you cannot interfere with your finances, and as a result affect your business goals. Yeah, and affect your business goals. So I thought that is good to add. And so thank you so much for those that have joined. I would like us to continue interacting in the chat section. Thank you, Mercy. I can see Mercy has said it's a great presentation on financial planning. For me, who are yet to actualize business and business ideas, this was timely. Yeah, it's good to have this knowledge even before we start, because we'll start on the right note. James says, thank you so much, Chris. Definitely learned a lot. We'll be able to make several smart financial decisions or financial goals for my business going forward. So I can conclude that one of the biggest take homes from today's presentation is on us having smart goals for our businesses. Or while we are doing our financial planning, we make sure that our goals are smart. They are specific, they are measurable, they are actual and realistic and timely. So thank you so much. Catherine says it was a very eye-opening presentation. Thank you so much, Chris. So thank you, Catherine, for such a kind comment. I would like to take this opportunity and give you a brief of who we are. We are John Daniel and Partners LLP, and we are basically an audit firm based here in Kilimani, Nairobi. So we do audits, we do accounting, we do a financial advisory, we do management advisory and tax advisory. So in case you have any need, feel free to call us. You feel free to speak to us. We are in Komodo, we are in Kilimandi, at Kindaruma Road, the junction of Wood Avenue. You can get us there, room 3E, or you can check us on our website, that is www.johndaniel.co.ke, and also inbox us in our email, that is at info@johndaniel.co.ke. Yeah, so that's basically us, and we are delighted to be able to host these webinars. We usually have these webinars every other month, and we do not only discuss one topic. We don't discuss one topic. We have so many topics in store for you as an SME. So please keep looking at our website and our social media platforms, that is Facebook, Twitter, LinkedIn, even Instagram. You'll be able to see these webinars. And when you're coming next time, please come with your friend, because I believe these are good conversations, more so for us as business people. And the best thing that you can do for your business is learn and learn from others. Yeah. So thank you so much for joining us today. Yes, Ali, this is not going to be, Ali, you're saying we really appreciate your efforts and time, and I hope this won't be our last meeting. Yes, I can promise you this is not going to be our last meeting with you. We have these webinars every month. Yeah, and we'll be happy to meet with you even in our offices. We are free to have such meetings. So thank you so much, Ali, for joining us. Mercy, yes, I will be sharing the webinar notices. Ali, we share on our Facebook pages, our Facebook page, that is because it's one, our LinkedIn page, our Twitter page, our our Instagram. And again, for those that have attended, I'll be sharing the same information to your emails. Yeah, so yes, thank you for that notice, Mercy. I'll be sure to share the next webinar earlier. And thank you for joining. So thank you so much for joining today's webinar. We'll be sharing the presentation and the recording to your emails. I believe that you registered and we got your emails. So we'll be sharing that to your emails. So just in case you missed something when Chris was presenting, you'll be able to get it in the email. Yeah. So thank you so much and have a good evening.
This is brought to you by John Daniel Partners LLP.